Tired of your spare change just sitting around, doing nothing? Ever wonder if you could be putting it to work for you, a little bit at a time? Today, we're pitting two of the biggest names in micro-investing against each other, Acorns versus Cash App investing. Acorns has built its reputation on one key idea: automated, hands-off investing. Their famous roundups feature takes the spare change from your everyday purchases and automatically invests it. You buy a coffee for $3.50, and Acorns rounds it up to $4, investing that extra 50 cents for you. It's designed for people who want to start investing but don't want to think about it. You get a diversified portfolio of ETFs, or exchange-traded funds, which is like a basket of different stocks and bonds, chosen for you based on your risk tolerance. It's simple, it's automated, but it does come with a small monthly fee, which can eat into your returns if you're only investing small amounts. On the other side, we have Cash App. You probably already use it to send money to friends, but their investing feature is a game changer. Unlike Acorns, Cash App gives you more control. You can buy individual stocks with as little as $1, thanks to fractional shares. This means you can own a piece of a company like Apple or Tesla without having to buy a full share. The best part? There are no commission fees. You pick the stocks, you decide how much to invest, and you can buy and sell instantly within the app. So, how do you choose? If you're a complete beginner who wants a set-it-and-forget-it approach, and you're fine with a small fee for total automation, Acorns is a fantastic way to build a consistent investing habit. But if you want more control, the ability to pick your own stocks, and a fee-free experience, Cash App investing is likely the better choice. It really boils down to your investing style. Do you want a fully automated savings jar, or a more hands-on trading tool? With that said, thanks for watching, and until next time.